How do you see the growth on the Indian financial markets, when it comes to what we see in the valuations and the earnings trajectory over the next couple of years? What are your views as far as Indian markets are concerned?
Yeah. So as you rightly pointed out, Mohit, last couple of years have actually been quite a challenging one in terms of the markets overall in the movement. Right? So if I compare with, let's say, September 2024, when the markets were really at their peak, apart from the mid cap index, the large cap as well as the small cap are probably between 5 to 10%, below where they were at their peaks. Right? Now, that is the price in a sense, right? The key thing that we track is also the earnings, right? Because that actually gives you a much better sense of where the markets are headed, right? Now, if we look at it, the last couple of years, the earnings were a little bit muted. But if I look at more recent quarters, and if I look at this current fiscal year and also the expectations for the next, right? What we're seeing is actually, despite all that has happened in terms of, you mentioned in the Gulf, what's been going on, the tariff wars and all of that, the economy has actually been remarkably resilient. Right? So if you look at power consumption, you look at auto sales, you look at bank credit, you look at GST collections, these have been actually remarkably resilient. So the underlying economy is actually in reasonably good shape. We've had an economy which is still growing at about 6.5 to 7%, real rates, which is close to about 11-12% nominal. You're seeing bank credit now come back to the mid-teens kind of rates as well, which is supportive of the economy. So as we look forward, we always look at where are the earnings headed, because that gives you the best clue on where the markets are headed. Right? And if I look for FY27 and FY28, we are looking at large cap probably in the 11 to 12% kind of earnings growth rates. Mid cap probably closer to 15 to 17%. And small caps in the 20% plus kind of a range. Right? Now, obviously, these are large categories on their own. But what this is highlighting is, the economy is quite a diversified one and quite capable of handling external shocks as well. Our sense is, this is actually the last 2 years have been a little bit of a price and time correction, which actually has reduced the risk in the market, actually. So we feel that this is actually a very good time for people to increase their allocation, because what we're also seeing is most of the price movement in the last couple of years was driven by FII flows and the rupee itself, right? The rupee was under pressure, which reduced the returns for FIIs, and with oil, etc., being at elevated levels, the case for India became much more difficult for FIIs. What we're beginning to see, and it's again very, very early trends, is that FII flows have, I would not say have completely reversed, but they're definitely moving in the positive direction right now. So July was, I would say, the first month where the outflows really started stemming, and early signs from August at least are very, very encouraging. So from our perspective, we see it having been a very testing times, but true metal is only forged when you go through fire, right? So that's also a time for investors to show their metal.